Have you ever wondered how investing can grow your finances? Imagine a tool so powerful it can turn a small seed into a mighty oak. That's investing. It's not an exclusive club for the wealthy. It's for everyone. Picture your savings not just sitting idly, but multiplying, growing, working for you. The beauty of investing lies in its potential to magnify your wealth over time. Remember, investing is not a get-rich-quick scheme. It's a long-term strategy for financial growth. So what exactly can you invest in? Well, there's a smorgasbord of options available, each with its unique characteristics and potential benefits. First up, we have stocks. These are essentially shares in a company. When you buy a stock, you become a part owner of that business. Stocks have the potential for high returns, but they also come with a fair amount of risk. Next, there are bonds. Bonds are like IOUs issued by governments or corporations. When you buy a bond, you're essentially lending money to the issuer in return for periodic interest payments and the return of the principal amount at maturity. Mutual funds are another option. They pool money from multiple investors to invest in a diversified portfolio of stocks, bonds, or other assets. They're managed by professional fund managers who make the investment decisions. And then there's real estate, which involves investing in property. It could be residential, commercial, or rental properties. Understanding the different types of investments helps you make informed choices about where to put your money. You've heard the saying, don't put all your eggs in one basket. This applies to investing too. Just as a farmer wouldn't risk his entire livelihood on a single hen's eggs, an investor should not risk their entire portfolio on a single type of investment. This is where diversification comes into play. Diversification is the practice of spreading your investments across different types of assets. These could be stocks, bonds, real estate, or even commodities like gold or oil. Imagine it like a seesaw. When one side goes down, the other goes up. If you have investments in different areas, when one area experiences a downturn, another might be on the upswing, balancing out potential losses. But remember, more isn't always better. It's not about having a little bit of everything, but about having the right mix that aligns with your financial goals and risk tolerance. Diversification doesn't guarantee profits or protect against loss, but it can help manage risk and potentially enhance returns. Ready to start investing? Here's how you can get started. First, you need to set clear financial goals. Are you saving for retirement, a down payment on a house, your kids' college tuition, or maybe something else? Defining your goals will help you determine the right investment strategy that aligns with your timeline and risk tolerance. Next, decide how much you can afford to invest. This could be a percentage of your income or a fixed amount each month. Remember, it's not about how much you invest, but rather about starting early and investing consistently. Once you've figured out your goals and investment budget, it's time to choose an investment platform. This could be a traditional brokerage, a robo-advisor, or even a mobile app. Each platform has its pros and cons, and the best one for you depends on your personal preferences and financial goals. Finally, make your first investment. This might be in stocks, bonds, mutual funds, or exchange-traded funds. As a beginner, it's a good idea to start with low-cost index funds, or ETFs, which provide broad market exposure and are less risky than individual stocks. Don't forget to do your own research or consult with a financial advisor before making any investment decisions. It's important to understand what you're investing in and why. Remember, the key to successful investing is patience and consistency. Start small, learn as you go, and stay the course. In summary, investing is a powerful tool that can help grow your wealth over time. We've traveled through the realm of different types of investments, from stocks to bonds, real estate to mutual funds, each offering unique benefits and risks. We've underscored the significance of diversification, a strategy that spreads your investments across various assets to mitigate potential losses. Guiding you through the initial steps of investing, we've discussed the importance of setting clear financial goals, understanding your risk tolerance, and choosing the right investment platform. However, the journey doesn't end here. The world of investing is vast and constantly evolving. It's crucial to continue educating yourself, staying informed about market trends and changes. Making informed decisions is key to successful investing. Investing might seem daunting at first, but with knowledge and patience, it can be a rewarding journey towards financial growth.